Our fund invests in the contingent capital of Western European banks. We look for the best capitalized banks in this sector, so it's very risk adverse. We're looking for banks with good quality earnings, with a high level of capitalization. But the best thing about them is that contingent capital bonds offer a really high yield with an associated level of realized volatility that is surprisingly low. So the adjusted risk, or the yield per adjusted risk, is very attractive indeed, and we think stacks up very well against other risk products, in particular bank equity and other kinds of bank debt, but also against high yield, where we think the level of volatility is very attractive, together with that level of yield that you can get from contingent capital. Contingent capital bonds generally over the course of the first part of this year in particular have done very well. That's been within the context of a risk rally, but our fund's done very well because we've been overweight of sterling and euro issues. We've been slightly longer of duration than our benchmark as well. So the fund's done very well, delivering over 6.5% year to date, and performed very well in that context. We've been in well capitalized banks, but also those banks people have been seeing the value in it, and we've seen good inflows into this part of the bank capital structure. We've got a very stringent three-step process for picking the best banks. So we look for well-capitalized banks, but also ones that have a high level of protection relative to the triggers on contingent capital. So we need the best capitalized banks. Once they've passed through that process, then we look purely as a value investor. So as long as they offer a greater level of potential return than some of the existing issues that we already have, once they've passed that bank vetting process, then we look for that, or potentially if we're making any switches on the yield curve within the universe that we look at. Well, we always say that the banks are a reflection of the economic environment that they react in or they operate in. Certainly that is the case with all Western European banks. So political instability, in particular if it leads to any sort of level of economic uncertainty, could certainly bring us into a situation where that would affect the value of contingent capital. Current situation in the UK around the Brexit situation and the deterioration in that regard has certainly affected valuations in UK banks, and certainly recently we've taken risk off the table in relation to UK banks to reflect that.